I'm gonna assume we're live and I'm gonna stop talking.
Good morning and welcome to Webinar Tuesdays. My name is Mary Jo Williams. I'm the Network Marketing Coordinator at the Virgin Islands Small Business Development Center. And on behalf of our State Director, Mr. Ted Gutierrez, I want to welcome you all here. Today we are in for a treat. We have a webinar that's called Basic Bookkeeping. This is not for people that are experts, that are accountants, that have degrees in business. This is basic bookkeeping. But before I continue, let me tell you a little bit about the Virgin Islands Small Business Development Center. The SBDC is a joint venture arrangement between the U.S. Small Business Administration and the University of the Virgin Islands. And as such, what we do is we provide technical assistance for people that are looking to start a business, people that are looking to grow their business, people that are in business and want to go out of business. As long as you qualify as a small business according to the U.S. Small Business Administration standards, which is generally you have less than 500 employees, and I think that applies to most businesses in the Virgin Islands, we can assist you. One of the best things about our services is that we provide these services to you at no direct cost. The SBDC is here providing services to businesses because of your taxpayer dollars. So you don't have to come up with another couple of $100 to pay for assistance. Okay, now today you're in for a treat. Like I said, we have basic bookkeeping, and our presenter today is Ms. Carmen Acevedo Adams. Ms. Adams has worked as a bookkeeper for over 25 years. Her clients ranged from restaurant owners, contractors, EDC companies, nonprofits, and homeowners associations. As a full charge bookkeeper, she has worked on accounts receivables, accounts payable, payroll taxes, monthly, quarterly, and yearly local and federal tax reports, posting of daily sales, bank reconciliations, and general journal entries. In 2016, Ms. Acevedo Adams started her own business as a full charge bookkeeper. She currently works as an independent contractor for the VI Small Business Development Center, as well as an English-Spanish, Spanish-English interpreter with local attorneys and other businesses. She loves what she is doing and truly enjoys helping people understand the importance of good record keeping for their financial well-being and for their businesses. Without any further delay, I'll turn control of the webinar to Ms. Carmen Acevedo Adams. Ms. Adams.
Thank you, Mary Jo. Hola, that's usually my greeting. You're gonna learn that from me. But welcome. I am really, really happy to have you guys here, everyone that came in. I also have a lot of your pre-assignments. A lot of them just came in, so unfortunately I haven't had a chance to see them, but I will definitely answer you. I hope that you enjoy the webinar. As Mary Jo brought out, this is a basic bookkeeping webinar. We are going to learn the basic things that you need, and from here, as you know, anything it grows. And one of the things that I want to specify to you is every industry has a specific way of doing books. I have seen already from your emails that we are getting people from all different industries. You may be a business owner. You may be wanting to start a business. You may be doing books for someone else. So each of you, what we're going to learn here is going to be basic things, but then from here, you're going to be able to grow and learn so that you can make the decisions that are so important for you to make for your business or for whomever you're working for. one thing I want to ask you, I really would like this to be as interactive as possible. I can't see, I don't know how many are there right now, but I'm hoping that I can answer questions that you may have as we go along. We're going to have Mary Jo keep track of your questions. You can post them in the chat. And if they're specific to what we're considering right now, Mary Jo will bring them out. If you have other questions that pop up as you listen to what we're talking about, go ahead and put them in the chat and we can address those later if necessary, okay? So, you know me already. Module 1, we're gonna talk about strictly what is bookkeeping terminology. Before you can understand what we're talking about, you have to know what it is that we're saying. So, and what it says down here, the company accountant is shy and retiring. He's shy a couple of $1 million. That's why he's retiring. I put that there because I want to emphasize to those of you who are business owners, it's very easy for someone that is working your books to work some money on the side. And I say this because I've seen it so much. So it's so important that as a business owner, even if you're not going to be doing your own books, you know how those books are supposed to be done. You know how those books are supposed to look and what kind of reports and what the reports are saying to you. So that's what I'm hoping that those of you who are business owners are not necessarily keeping track of your bookkeeping, but may have someone do it, that you get out of this, that you understand the basic process so that you can ask the important questions that you need to ask, okay? So let's go to some of the things that we're gonna talk about. Terminology, what is cash and accrual, what is a journal and what is a ledger, a general ledger. We're gonna talk about payroll. And payroll is a big issue right now with some of the new proposed laws that are coming up. Planning and budgeting and control, very important for any business. You need to be able to plan, you need to be able to budget in accordance with that plan and then have the control to see it through. And then we're gonna also at the end talk about auditing. Remember, this is a 5-part series. Today, we're gonna strictly adhere to terminology, and the other items in this list are going to be taken care of in the other series and the other meetings that we're gonna have. So you have to start at the beginning. So let's start with some basic terminology. You should also have received something that looks like this, which is basic bookkeeping terminology, and you should have also received a manual. I hope that all of you have it, and if you don't, maybe you can let Mary Jo know, and we can see about sending it to you, okay? The balance sheet is a very, very important report. The balance sheet is going to tell you at a specific given point in your business, in the time frame of your business, what is happening with your business. If you're going to go for a loan, one of the first things they're going to ask you for is a balance sheet. Why? Because it says so much about your business. So we're going to learn the different aspects of a balance sheet. As you can see from this one here, it's dated December 31st, 2015. It's a specific date. It's not saying January 1st through December 31st. It's saying December 31st. In there, you have your assets, you have liabilities, you have owner's equity. Under each one of these, you have different accounts, and we're going to learn what these accounts are and what they say and how they impact your business. Assets. So assets, lost here. Economic value. The things, what are assets? It's something that is owned or controlled by you, by the business owner or by the stockholders. If you are a self-proprietor, you're a business owner. If you have a corporation, then you have stockholders. These are resources owned by a company which have future economic value that can be measured and can be expressed in dollars. Keep that in mind. have future economic value that can be measured and expressed in dollars. Examples of this, you have cash, you have investments, you have accounts receivable, inventory, supplies, land, buildings, equipment, and vehicles. These are all mostly tangible things that can be translated into a dollar amount. Now, why is that important? You have many other assets in a business, but these cannot be measured or expressed in dollars. Like it shows here, a company's outstanding reputation. That is maybe even more valuable to you than money in the bank, if you are someone that cares about that, because it's going to determine the success of your business, the customer base, the value of successful consumer brands. If you're a manufacturer, the management team, what does it say about you? So these items are not reported under the assets on the balance sheet, but they are an asset to you. Asset is also part of the accounting equation. Assets equals liability plus owner or stockholders' equity. We're going to talk about all of these terms as we go along. Any questions so far? Okay. So we saw that you have assets on the, now I don't know where you are. Assets on my left hand is assets and liabilities is on the right hand. Okay, in your screen. I hope that's the way it shows to you, but that's not necessarily. Okay, so some of you, one of the questions that I ask is how much experience do you have? If you have ever reconciled a checkbook, if we still do that, you will know what's a debit and a credit, okay? So, but you have to know a little bit more than that. When is it a debit? When is it a credit? To properly assign those things that are the things that are going to your business, whether it's an expense or an income, okay? So that's one of the things that we're gonna consider here. So what are liabilities? Future sacrifices. Yeah, money you're gonna spend. Responsibility to another, settlement of a debt, all of that can be considered a liability. So it basically is obligations that a company has or an organization has, and that it's money owed to lenders or suppliers. You will often see the word payable. We're gonna talk about accounts payable. Those go under liability. Liabilities also include amounts received in advance for a future sale or for a future service to be performed. And that's an interesting sentence there. And we're gonna go into that a little bit more in future trainings, okay? So those are the basic two things that you have in a business. You have your liabilities, you have your assets. You also have, and very important, is the equity. Now, the equity is ownership of assets. And this is after debts are paid. In other words, clean money, so to speak, to you. And it's something that can be resold for gain. Is the book value of a company, because is the reported asset amounts minus the reported liability amounts. So you may have, let's say you have $1 million, but you owe $500,000. So in reality, you only have 500,000. You don't have $1 million in assets, in equity, okay? So that's why it's important to keep that in mind, because if you just look at what the book bank says, but you don't look at what the ledger or your other accounts payable says, you may make very bad decisions. So you want to, before you make decisions on anything, you want to ask your bookkeeper to give you a balance sheet. Let me see where we are right now today. And that's what it's going to give you, a snapshot of where you are at that minute. Hoping that all of your bank accounts are up to date, all the reconciliation has been done up to date, okay? So that's another part of bookkeeping. For it to be accurate, it has to be kept up to date. If you're behind in your reconciliation, then what your ledger or your checking account is telling you is not correct, because there may be things that the bank has processed that you have not included into your checking account ledger. So you have to be able to have an accurate picture of where your business is. It has to be up to date. And this is something that, again, as a bookkeeper of many years, I have a pet peeve with a lot of business owners, because many, especially sole proprietors, they will just stuff bills and things into a desk corner and pretend to know where their business is, but they don't really know, because they don't know what there's no way for them to keep in their mind everything that is in there. You need to put that in order. You need to put that into a system that is going to tell you what your assets are, what your accounts payables are, what your cash in the bank is, what your other things that may be worth any money are, so that you can then be able to really know where you're standing. So it's important that your accounts are kept up to date, and that you are able to produce a comprehensive and accurate balance sheet to give for an owner or a business person. Questions? No? Okay, so Mary Jo?
No, there was a question that, can we do this in Spanish? But we'll talk about that at a later point.
Yes, of course, soy puertorriqueña, hablo español. I would be happy to, but it would take, I would need to really prepare for that, but we can do that. If there is a need for a whole webinar, we can do that. And if not, we can also do a one-on-one consultation with you. SBDC is all about helping business owners, in particular small business owners, to be able to get their business going up and running and to be successful. So whatever way we can help you, we will try, to do it. So we can talk about that later. We can talk about that later. Income statement. Okay. Again, you notice that it has a specific date. This takes into consideration also the whole year of 2015. In the income statement, you have revenues, you have expenses, and then you have net income. With your expenses and net income should always equal what your revenues were or started with. So if you add these two amounts together, you will see that it will come out to 27.8. It should always balance, okay? The same as the balance sheet. I forgot to say that before. The balance sheet is supposed to do that balance. So it should be able to show you a rounded picture of your business. Things that are included in the income statement, your sales, any other type of income that your business may have. For example, I'm a bookkeeper, but I also do interpreting once in a while when I'm needed. So that's a separate type of income, but it's something that I also have to take into consideration, and I have to also talk about in my income tax return. So those are all income or revenues. Notice that that's another word that is used for income is revenues. Your expenses, cost of goods sold, we're going to talk about that a little bit. Depreciation expense, very important. Wages expense. If you have employees, or even if you are a sole proprietor and you pay yourself a salary, or you pay yourself on a weekly basis, well, you have to take that into consideration. Besides wage expense, under here should have been taxes as well, because once you have wages, you have payroll taxes. And later on, we're going to have a module that is going to speak about that, and we're going to go into what are those different taxes. You have rent expense, if you're renting, interest expense, supplies, utilities, and then the total expenses. So you notice that the net income is a result of your total revenues, what actually came in minus your expenses. That would be your net income. Questions? Ask me questions, people.
One quick question, Carmen. Somebody wanted to know if they could get the presentation now so that they could follow along, or?
Yes, that was one of the things that we were hopefully mailing to them.
Okay, I can do that now.
The student manual.
Yeah, I sent the student manual.
Okay, so that's based, everything that we're talking about is in there.
Great, thank you.
Okay. Are you, do they have it? Does everybody have it?
It's in I sent it out in the email and it's also in the chat.
Okay.
Hello, but the presentation is different. The presentation is, we're following to make notes as we go on each page.
Say that again. I'm sorry, I didn't hear you.
The manual is set up different to the presentation, but when we have the presentation, as information is provided, you can make the notes on that respective page.
Okay, okay. So what you would like is actually the PowerPoint presentation.
Yeah.
Okay, so maybe we can include that the next time. And we can probably send this one to you afterwards.
Yeah.
But basically everything that is in the PowerPoint, it's in your manual. Okay?
Yeah, set up differently, yes. Okay.
Yeah, just, okay, okay. So the income statement, going back here, sorry. The income statement is one of the major financial statements that is used by accountants and business owners. There are other financial statements that are used, which is the balance sheet. There's supposedly 5. The statement of cash flows, statement of comprehensive income, and statement of stockholders' equity. The income statement, you may have heard the term profit and loss statement. That is exactly the same thing. It's also referred as to the profit and loss statement. It's a statement of earnings or a statement of income. So throughout this explanation, this training, we're going to use that term income statement or P&L. You may have someone ask you for a P&L. Well, this is what they're asking you for, okay? Income statements can have different dates, different, it can be used in 2 ways, cash method and accrual method, and we are also going to discuss that briefly. And it also can have different time intervals. You can be asked for an income statement for the last 3 months, for example, a quarterly income statement. You may be asked for an income statement of the last year, which is what you are seeing there on the screen. Or you may be asked for a fiscal year income statement. Fiscal year, what is a fiscal year? The calendar year goes from January through December, but maybe a business started in April, let's say. So and they want to keep their records from that time of inception when they started going forward. So they will say that they want a fiscal year. So their fiscal year will start from April 1st through March 31st. So when they ask for a yearly income statement from their accountant, that accountant or bookkeeper will give them a statement that includes anything that happened from April 1st through March 31st. Not every, for example, I'm thinking of if the franchise report that you have to do at the end of the year, they don't care whether you're a fiscal year or a calendar year. What they're asking you for, the information they ask you for is a calendar year. So they're asking you from January to December of the previous year. They don't care how you do it, but they just want whatever is in the books, in the records for that year. So, but for your personal record keeping and for how it's going to look in the books, if you have a fiscal year, then it would start from whenever your year started. Many companies may start July 1st through June 30th or September 1st through August 31st. So whatever is your fiscal year, that's a year, and that's when you do reports, it has to encompass that time period. So basically an income statement can report any time period. Okay, questions?
Quick question. What's the difference between revenue and income?
None. Revenues and income are, revenues is income. There is, we're going to talk about, there is a slight difference when you are using an accrual or a cash, because then your income is slightly different from, it's considered different by the, an accrual, the income is right then and there, is considered when it's sold, but you may have sold something, but you don't necessarily get the money immediately. A cash is it's considered income when you receive the cash in your bank, in your hands. When you get that, when you give them that receipt, yeah, I received everything. But an accrual is different. So we're going to talk about that a little bit later. But basically, revenue and income is the same thing in this case. Okay.
One other question.
Mm-hmm.
How is the depreciation expense determined?
Oh, that is a whole topic by itself, and we're going to consider it later on.
Okay, great. Thank you.
Yeah, not today. Today we're dealing with terminology. We are going to discuss each of these things individually and in the later webinars that we're going to have throughout the month, okay? But it will be discussed. Okay, so revenues from primary activities are often referred to as operating revenues. For retailers, manufacturers, wholesalers, and distributors, the revenues resulting from their primary activities are referred to as sales revenue or sales. For companies providing services, the revenues from their primary services are referred to as service revenues or fees earned. Under the accrual, this is what I was just saying, the accrual basis of accounting is service revenue or sales revenue are shown at the top of the income statement in the period they are earned or delivered, not in the period when the cash is collected. So you may be a contractor and you may enter a contract with someone that you're going to build whatever, and you give them a quote and you say, this is how much it's going to be. Contract is signed. Yes, they want you to do it. As in an accrual, that money goes into your books the minute that contract is signed, because it's assumed that that money is coming in and that you can count on that money. Under the cash, that money doesn't go into the books until you actually receive payment for your services. So that's a simple way of putting that, okay? Revenues under cash, revenues occur when the money, under accrual, when the money is earned. Receipts occur when cash is received. So that's two other terminologies. Both are referring to income, revenues or receipts. But receipts refer to the cash method of accounting, of bookkeeping, and revenues refers to the accrual method of bookkeeping. And I hope I'm not going too fast. I hope I'm explaining properly to you. Again, this is terminology only. This is just so you know what, when we use these terms later on in the series, that you understand what we're talking about. You're going to be getting your manual. The manual has all this information that you can go back to it, okay? So we're just kind of keep making your ears used to these words, these rare words. As a person that interprets, sometimes you have to listen to something a couple of times before your brain gets used to it and then can bring it out. So that's what I'm hoping. By going over this information with you, you start absorbing it and you're listening it to it. When you read it, it's another take of it, and you're going to be better able to understand the processes that we're going to be talking about later, okay? Cost of goods sold. Question?
Yes, can you explain accrual again, please?
Okay. Follow, I don't know if you can follow with my mouse here. Under the accrual basis of accounting, service revenues and sales revenues are shown at the top of the income statement in the period they are earned or delivered, not in the period when the cash is collected. So let's go back to that example, a contractor, and he goes into contract with someone or a firm, and the contract is he's going to build this, let's say it's something simple. He's going to build a generator shed, and he says it's going to cost $3,000. Okay, so in the accrual method in his books are going to show income of $3,000 from the date that that contract is signed, because he is assuming the revenues are going to come in, that is $3,000. He can now go and spend whatever he has to spend to get the materials for that job, because he is understanding that he's going to be getting reimbursed for that when the cash is delivered. Under the cash method, even though he told and he signed, that money is not shown in the books until that money is actually paid. Now, most large businesses go under the accrual method. It's understood that it's a clearer or more concise way of keeping your books. And again, in my experience here with business owners, in the islands, we have the outlook that cash in the hand. that's what counts, you know? So many businesses here do the cash method. And I understand it, you know, to them it's easier to know and to keep clear in their minds when they use the cash method. But you have the option of using both, and they both have the pros and cons. Again, we're going to go a little bit more into that in the other series, okay? Was that a little bit clearer?
Yes.
Okay, good. Okay, so cost of goods sold. It can be cost of producing a product. It can be cost of inventory sold if you are a retailer. If you are a manufacturer, cost of producing a product. Purchases made minus ending inventory. That's a little trickier, and we're going to talk about that later. So basically, it's the cost of the products that a retailer, a distributor, or a manufacturer has sold. When the cost of goods sold is subtracted from net sales, the result is the company's gross profit. So basically, again, you have $1 million. You expensed out 500,000. Among those 500,000 is your cost of goods sold. Okay, because you put out money of your own to get whatever it is that you are selling, either for producing it or for buying it and making it available. You can't say I made $1 million until you deduct your cost of goods sold from that $1 million, because that will tell you really what your net profit is, okay, or your gross profit. Net would be later after other things are deducted, but what your gross profit is. So today, cost of goods sold, I know a particular business that I work for, they use it for any kind of expense on any contract that that they have to go through. Many times they have to fly in specialists for to solve any kind of issue that may come up in their contract. That can be part of cost of goods sold, because it's costing them that to be able to produce, to give that service that they are that they have promised to give to their client. Okay, so that's some of the ways that it's being used. I know here, for example.
Quick Question, and the cost
Yes.
of goods sold, is that relevant to the service industry?
It can be. It can be. It can be. Because even in the service industry, you have to have certain things in place to be able to offer that service. For example, as a bookkeeper, I have to have the latest accounting software. And I have to have not only the latest, but the one the year before and the year before and the year before, because I have different clients. And some may always keep up to date with the latest, but someone may have 2 years ago. So these things cost money. Okay, I am selling my service that is costing me to have that service. Payroll, for example, if you're doing payroll through QuickBooks, QuickBooks now charges you separately for a payroll subscription, separate from the product itself, separate from the software. So this is a monthly fee that you have to pay. So if I am going to do payroll for clients and I am going to be providing them with the payroll software, that's something that I have to take into consideration when I am charging them, because I have to pay. So whatever I'm charging them should be able to pay for that and still give me what I need to have as an end result. So yes, even in the service industry, you can consider cost of goods sold. On a smaller scale, you don't use that. You use expenses, because it is an expense. It is the cost of goods sold is our expenses. Okay, but whatever you have expenses you have to incur to provide that service could be considered cost of goods sold. But in reality, it's more towards the manufacturing and retailing and distributing business. But the idea behind it can be used. Is that does that answer the question for now?
Yes.
Okay. Okay. So, and keep that in mind. One of the things we wanted to know before we started, and I think we kind of forgot, we wanted to know how many of you are business owners, how many of you are thinking of starting a business, or how many of you are simply working for someone else as a bookkeeper. Can we maybe do that right now quickly, just so that I can have an idea? Mary Jo?
Give me a minute. Go ahead and talk and I'll bring it up.
Okay, good. So why? Because remember what I told you, that bookkeeping has to be industry specific. So the way that I keep my books as a bookkeeper for myself, a small business owner, very small business owner, it's very different from the way that I would keep the books for, if they say a shopping center or a big manufacturer. It's very different. So you have to keep that in mind. If you are thinking of going into bookkeeping as a business for yourself, you need to, okay, so yeah, if you could answer those, it's just 3 quick questions, because it's gonna help me to know how to talk to you guys now. If you will go ahead and answer those quick questions. To submit.
Okay. I think we're almost done. So for the people on Facebook, the poll question is, are you in business? And I'm going to end the poll in 3 seconds. Okay, poll closing now. 69% of the people that are on this webinar are currently in business, 31% are not.
Okay, great, good to know. Okay, the other question, please.
What was the next question?
I'll tell you right now. There's 3 of them.
Okay, continue and I'll bring up the next question.
Okay, we had 3. So in business, 69%. So I'm thinking, are you doing your own books? Do you have someone to do your books? Again, I am happy that you are here because either way, you need to know this information, especially if you are the business owner or you're the manager of a business and you need to know this, okay? Because it's very easy to, and I hate to keep saying this, but it's because I've seen it so much. It's very easy to fudge the books, okay? And if you don't know what you should be seeing, then you won't, you will accept whatever is put in front of you. And it's a protection for you to know what we're going to consider here. So it's I'm happy that as business owners, you are here. If you are, and I know some of you already are working as bookkeepers because I have received some of your pre-assignment answers, and I'm happy that you're here. I hope, again, we are starting with the basics. You probably know all of this already, but it's a good refresher. Okay, it's a good refresher, and I hope that it's helpful to you either way. Okay, so cost of goods sold, we considered that. Expenses is dishing out money. We know that, but many things can be expenses. These are what's involved in primary activities incurred in order to earn normal operating revenues. Again, notice that incurred in order to earn normal operating revenues. That little sentence says a lot, because as a business owner, as a self-employed business owner, many times we want to put as expenses into our business things that have nothing to do with the business. And one of the last things we're going to talk about is auditing. And when IRS audits you, they have very strict guidelines as to what can be considered a business expense. So it's important that you stick to what are expenses incurred in order to earn normal operating revenues. In other words, that those expenses, yes, there are ways to fudge, there are a lot of gray areas, and if it can help and it's okay, but you want to be very careful when you decide what is going to be a business expense and what is not, okay? It's common for expenses to occur before the company pays for them. For example, wages earned by employees, employee bonuses and vacations, utilities. You pay for utilities sometimes before they happen. You may pay for internet usage, for example. They charge a month ahead. WAPA is charging you for good, heaven knows what. But these are all things that are legitimate expenses for a business. However, some expenses occur after the company has paid for them. Expenses from secondary activities are referred to as non-operating expenses. For example, interest expense is a non-operating expense because it involves the finance function of the business rather than the primary activities of buying or producing and selling. If you have a loan, you took a loan on your business to be able to start your business, to buy a car for the business, the interest is an expense that is legitimately, you can put that in your income reports, in your income tax at the end, your 1120 or your 1040, whatever. You can put that because it's something that is considered a business expense. You want to put the trip that you took to Hawaii, and you want to say that you spent 5 minutes talking to somebody about your business. So it's a business expense. The IRS is going to question you heavily on that, and it's going to ask you to produce receipts, and it's going to ask you to produce proof that you met with that client and how many times you met with that client and for how long. So you want to think, carefully when you decide what is going to be expenses and what is not going to be expenses. Mary Jo, you let me know when you're ready for the other one.
Okay, I'm ready with the next question. And the next question is, do you have any accounting knowledge? The poll is launching now. Okay, the poll will end in 3 seconds. And the poll says 75% of the people know how to balance their checking account, and 25% of the people have no knowledge of accounting.
Very good. Very good. Wonderful. Wonderful. So you guys know all of this already. At least you know some of it. So that's good. I'm glad to hear that. And for the 25 that don't, I hope that I'm not going too fast and this is going to be helpful again. We're just doing terminology. We're going to discuss all of these things to a certain amount of depth in the other web sessions that we're going to have. Again, keep in mind that we're basic. This is basic accounting information, bookkeeping information. But hopefully from here, you should be able to go back, read a balance sheet, know what it's all about, read a P&L, an income statement, know what it's all about, okay? So that you are better able to know where your business or whoever you're working for business is at a specific time and make better decisions, okay, based on that. Okay, so expenses, we said that salaries and wages are expenses. Depreciation, we had a question on that earlier, depreciation of assets, that's an expense. So, so we talked about interest is a non-operating expense because it involves the finance function of the business rather than the primary active. Salary though is part of your business of operations because it's part of operating your business, is paying those people that are working for you, is paying their taxes, making sure that they have that check on a weekly and a bi-weekly and a monthly basis, however it is. Depreciation of assets is a very important, it's a very long-winded subject and with many heads. So we're gonna, again, give you basic information of this. If you have more questions on that, we can talk later, or if you have an accountant, you can discuss that with your accountant as well, because there are many steps to this, okay? It's not a 1, 2, 3. Sorry. Accounting period. So an accounting period is the amount of time in which income statements and other financial statements are used to track and report on operating results. It's common accounting periods for external financial statements include the calendar year, which we discussed before, January through December. It can also include just a quarter, okay? For example, if you have employees, one of the reports that you have to do on a quarterly basis is the VESA report or the unemployment report. And the unemployment report is going to give you a specific accounting period for which they want to know what the wages that you paid for those employees were. Then you have an annual report for the workman's comp report, where you have to give them, then with the VESA is every quarter, January through March, April through June, July through September, October through December. Okay, that's VESA. But then the workman's comp is going to ask you for a yearly report. So the accounting period for the workman's comp will be from January to December. So different places are going to ask you for different time periods, or if you're an EDC company, they also have quarterly reports. They also have annual reports that are requested. And it has to do with your employees. It has to do with your business, what you made. So you have to go by what is being asked, but these guys are able, you should be able to always provide this information. Again, keeping in mind that your books are up to date. So you also have monthly accounting periods. However, the financial statements for the monthly accounting periods are likely to be used only by the company's management. Yes, because it's very, other places won't want to know what you're doing on a monthly basis, because just by looking at a yearly, they will be able to more or less say. Are there any questions? I think I saw somebody raise their hand. Mary Jo?
Somebody asked if your contact information will be shared, but yes, that will be shared.
Yeah.
That's actually in the presentation.
Yeah. So remember that, just putting this in, I am working for SBDC as an independent counselor. So if you want to meet with me on a one-on-one, just sign in through SBDC and request that meeting, and you don't have to pay me. Otherwise you would have. you won't have to pay me, because SBDC is going to take care of that. So I will be able to meet with you and give you that one-on-one answers that you need. Okay. So SBDC is doing this for you. Keep that, use it. Okay. As a business owner, you want to look to everything that you can get for free. And this is one thing that you can get for free. So make use of it. Okay.
And
something
I have
else?
the poll. So, sorry, I
sorry?
have the poll questions ready whenever you're ready.
Go ahead.
Okay. This question is a little late, but it says, what do you hope to get out of this presentation? And you can answer you can give the answer, you can use more than one answer. And the people that are viewing on Facebook don't have the opportunity to get these poll questions or participate in the poll. But we'll take about 5 more seconds for people to answer. And the polling is ending now. And in terms of the poll, 70% are here because they want to understand what my bookkeeper needs to do.
Wonderful.
24% are here because they want to become an accountant. And 62% want to know where their business is financially.
Wonderful. I am really happy by those results. That's exactly what I wanted to achieve, to get to those of you that want to know where your business is financially, and also to understand the process. So that's wonderful. I am really happy that you're here. And I really appreciate your coming in. Again, we're talking about basics terminology here. We're going to go more in depth into everything in later weeks, okay? So, review. We used a balance sheet. A balance sheet gives you a snapshot of your business at a given time in your business, okay? It's one date. December 31st, you can do a balance sheet at any time throughout your year of business. It's going to tell you right then and there again, and I emphasize this again and again because I see it so much. It will give you accurate information only if your information is up to date. So this is something that, for example, QuickBooks. A lot of people buy QuickBooks and they expect QuickBooks to resolve all the issues for them and to be telling, for it to by itself, tell the business owners what is happening. But QuickBooks is only going to tell you what you feed it. If you feed it the information that is supposed to go in there, then it will give you correct balance sheet. Then it will give you correct P&Ls, income statements. Then it's going to give you correct quarterly reports. But if you don't feed it the correct information, it's going to just use what you're giving it, okay? So keep that in mind. If you're using QuickBooks, you have to give it the information that is necessary for it to give the proper, and QuickBooks is amazing. For a small business owner, it's a very, very good tool to have. But again, you have to feed it for it to spew out the correct information. We talked about liabilities. We talked about equity. We discussed the income statement, the P&L. We discussed what revenue is, what cost of goods is. And again, notice that it's just this. This is what you're gonna see most of the time, COGS, and what an accounting period is. In this unit, we're gonna finish up with the basic accounting terms that will help you better understand what is going on with your books, okay? So we're going to go here into a little bit more terms that you probably are more familiar with. Accounts receivable. Money owed to a business for a product or a service provided, okay? Basically, amount owed to a company resulting from the company providing goods or services on credit. Okay, and notice on credit. So accounts receivable, if you sell, let's say Oliver Exterminating. They come once a month or however many times, and they do the service for you. They don't charge you until the end of the month. They send you an invoice. So you're receiving the services, but you're not being charged. So that money that you owe them still is going to be accounts receivable for them, okay? For you, it's going to be something else. For you, it's going to be accounts payable because it's money that you have to dish out. For them, this is money that they're expecting to receive. And this is a very important account you definitely want to keep up to date, okay? You definitely want to always know what your accounts receivable looks like. And of course, you also want to know what your accounts payable looks like. These are debts owed by a business to creditors for purchased goods or services. An amount owed to a supplier or a vendor for goods or services that were provided in advance of payment. Since accounts payable is a liability account, it should have a credit balance. The credit balance, and we're going to discuss this further down the road, okay? The credit balance indicates that the amount that the company or organization owes to its suppliers or vendors. Any questions so far? This is pretty simple, right? We know this.
Yeah.
Okay, so depreciation. Reduction in the value of an asset with the passage of time due to wear and tear. So, okay, let's talk about this. You buy a car, the car cost you let's say $35,000. You bought a truck for the company because you needed to be able to, because you needed to do your work, to be able to earn your money. But in your books, you cannot always, 2 years down the road, you cannot say that you have a $35,000 worth truck, because that truck is no longer worth $35,000. As a matter of fact, the minute you take it out of the parking lot, they say you should deduct $3,000 out of it at least, right? So this is called depreciation. And what you're doing is it's an expense, because it is an expense to you, the wear and tear of your things, of the things that you're using for your business. It could be a car, it could be a building, it could be any kind of equipment that you use for your business. These things can be depreciated. So in other words, the value goes down as the time goes. And there is a cutoff amount of years. And again, it depends on what it is that you would know. You can get this information from an Internal Revenue website, what it is, and that will tell you how many years you can depreciate it. After that, they say, forget it, we can't go any further than that. But again, we're going to discuss this a little bit more later. We're just talking what terminology means, okay? General ledger.
Accounts payable, is that considered a liability?
It's a liability, yes. Accounts payable is a liability account.
Okay.
Accounts receivable is an asset account.
Okay. Now, okay, if you have a mortgage, would your monthly payment of principal give you equity until the mortgage is paid in full?
I have to think about that one.
Okay.
Let me think about that one.
Okay.
Okay. General ledger. General ledger is considered to be a permanent classified record for each business account. Okay, it's an account or a record used to sort, store, or summarize a company's transactions. These accounts are arranged in the general ledger and in the chart of accounts, with the balance sheet accounts appearing first, followed by the income statement account. So a general ledger is going to say everything that you have for your business, okay? Every account or record should be there. If you have customers, if you have vendors, if you have employees, all of those are separate accounts, okay? So all of these accounts are arranged in what is called the general ledger. Notice that it says it's considered to be a permanent classified record for each business account. Again, that's the way that it should be, permanent record. And I don't want to be the harbinger of doom, but I just want to just make sure that what you have in your general ledger, you can quantify, you can show, you can back up, okay? That's this. So because it's permanent, when they audit you, they're going to look at that general ledger. They're going to look at those accounts. And not necessarily, and you can be audited by many. It depends on the type of business that you're in. Let's say that you're a business that receives a grant from FEMA or from any other organization here on the island. They have the right to audit your accounts to see how that money was spent. So again, keep those accounts. Make sure that what you have in those accounts can be substantiated. Okay. We had a question there, Mary Jo?
No, we're good. The session is scheduled to go until 11:15.
And we are at what? 11. Okay.
11:05.
Yeah. Okay. We're almost done. Interest is a type of compensation to a lender for taking a risk of principal loss when money or another asset is loaned. You can charge interest, or you can be charged interest. When you charge interest, that's income for you. That's revenue. When you are charged interest, that's an expense. Okay, so it depends from where of the equation you're looking at it. If you're the one charging the interest, it's good. You're getting money, additional monies, and you have a right to, depending on the contract. Or for example, it's not interest, but it's similar. You can charge a late fee to someone who owes you money if they don't pay by the agreed time. You can say, if not paid by the 30th of the month, you will charge 10%. That's additional income to you, and you can do that. To the person that has to pay that 10% because they didn't pay on time, their expenses just grew by that 10% because they didn't pay on time. So that's an expense to them. Inventory can be described as either a list of goods and materials or the goods and materials themselves. So you can say, let's do inventory, and then they bring you the list. That's inventory. Or you can say, this is my inventory. This is what you have as good as materials for your business. Okay. Inventory is very important to keep track of it. Again, using QuickBooks, because it's a simple software, you can actually keep inventory, track of inventory in QuickBooks. They have what it's called a POS, point of sale apparatus that you can use as you sell. With the barcode, you can actually be taking out from your inventory so that your inventory is always kept up to date. And that's available with other softwares as well. I'm saying QuickBooks because it's so simple. A journal is used to record the financial transactions made by a business. And these are kept either, I really don't know of anybody that actually keeps it in a book journal anymore. Most use the computer and use a software for it. A journal can be kept in something as simple as a spreadsheet. you can keep a journal. Payroll. That's a company's financial list of the salaries, the wages, the bonuses, the net pay, and deductions of their employees. Now, and I'll talk a little bit more about this later on, but I mentioned before, we have some new regulations that are being proposed to be put on, and they're very iffy. So we have to, I think one of the obligations of a good employer is to keep their employees up to date of what their rights are. With some of these new regulations, it may look like they're good, but in the long run, they may not be as good as they look. So we'll talk a little bit more about that when we get to that section, okay? But so as an employer, it's important that the person that you have doing your payroll is up to date on these regulations. Very important, because if not, you can pay penalties and interest for not knowing and not doing in the right way, okay? So keep that in mind. Trial balance, very simple. It's a worksheet usually prepared at the end of each recording period. It lists the balances in each of an organization's general ledger accounts. You have your debits, you have your credits. Often the accounts with zero balances will not be listed. The debit balance amounts are listed in a column with the heading debit balances and the credit, of course, with credit balances. The total of each of these two accounts should be identical, okay? So it's called a balance for a reason, trial balance. So it should be, it should balance out. And again, we're talking now only the terminology. We'll go more into it later. So accounts receivable is money owed to a business. Accounts payable, money owed by the business. Depreciation is a decline in value of assets. Trial balance is the balance of all ledgers, usually in the format of 2 columns. Very simple. What will we consider next? Modules 4 and 5, which will be next Tuesday. Same time, will be accounting methods. We're going to go more into depth on accrual versus cash. We're going to talk about keeping track of your business through accounts receivable, accounts payable. We're going to talk about the journal, general ledger, and cash management. Okay. This is my contact information. I hope that this was helpful. For those of you, there's a lot of you that already understand accounting to a point. This was very, very simple information. But for those of you that are now learning, I hope that this was helpful to you. As I said, we're going to consider more later on. And the series is today is 1 of 5. I would love to hear your comments, your suggestions about what could be done better, what else could be included in this series. I appreciated the person who said, can it be done in Spanish? So any little tidbit of information you can provide us would be very, very helpful, and we very appreciate it, okay? I hope that you enjoyed it. I hope that you got something out of it, and I hope to see you again next week.
Okay, we've launched the next poll based on the information you received today. How likely are you to complete the series? And there are 2 other poll questions after this, and I'll give this one 5 more seconds. Okay, the poll is ending now. 82% of the people said they're most likely to attend the rest of the sessions. 18% said likely, and nobody said not at all. So it looks like we're going to have a full house for the next 2 sessions.
Nice, wonderful. I'm really happy to hear that.
Now, the next poll question is, was the level of the presentation too easy, just right, or too difficult?
It's not up, Mary Jane. Okay.
Was the level of the presentation too easy, just right, or too difficult? Wow. Okay, and we will give another 5 seconds for folks to answer this question. Okay, the poll is ending now. And 90% of the people say the presentation was just right. 7% said it was too easy, and 2% said it was too difficult.
Okay, wonderful.
Okay, and our last poll question is, what time would you prefer to have future presentations? Understanding that the next 4 webinars in this series, they're locked in at 10 a.m. But future presentations after this series, when would you prefer to have them? Morning, afternoon, or evening? And we will give you another 5 seconds to answer this question. And the poll is closing now. 68% of the people say morning, 12% say afternoon, and 20% say evening. Okay, but understand the next 4 webinars in this series will be at 10 a.m. and they're scheduled to go from 10 a.m. to 11:15 a.m. And with that, I'll ask Carmen to bring up the last slide. And I'll let you guys know, thank you for attending today's webinar, Basic Bookkeeping. And we have another webinar on Thursday. It's part of the AARP webinar series. And that webinar is the Fundamentals of Business Credit. And that one will be in the evening at 6 p.m. from 6 to 8 p.m. The Fundamentals of Business Credit. Tomorrow, tomorrow at 10 a.m., the Virgin Islands Economic Development Authority is doing another presentation talking about the internet infrastructure, and that should be pretty good. And then next week, Tuesday, we have Ms. Carmen Acevedo Adams coming back with the webinar, Accounting Methods, Keeping Track of Your Business. And that will be from 10 a.m. to 11:15 a.m. Please remember that you have to register for each webinar, even though they're all listed one time, you have to register for each one. And those of you that don't know, the SBDC has offices in St. Croix as well as St. Thomas. In St. Croix, we're located at Peter's Rest next to Sprint. And in St. Thomas, we're located on the 2nd floor up at Niski Center. Our offices are not open to walk-in traffic. We are seeing people virtually via telephone, webinar, Zoom. So please call us. Our phone numbers are listed. Send us an email. Check us out on the website. You can register on our Facebook page for the webinars. You can register on our website for the webinars. And with that, we hope you guys have a pleasant Tuesday afternoon, and we'll see you next week, Tuesday, for Webinar Tuesdays with Ms. Carmen Acevedo Adams. Thank you very much, and do have a wonderful day.
Have a good week. Bye.